Welcome back, investors, to Ticker Time News. I am Adam. Thank you for joining me today. It has been a great day in the market. Lots of green in the market today. There was actually a bit of a gap up from the close in the S&P 500 yesterday to its open today, and there was a lot of green. Now, the indices are still down for the year, but that doesn't mean that we're out for the year. It was a really good day. So if it is your first time here, welcome. Thank you for joining me. And know that this live stream is for you. If you have any questions at all, leave the ticker symbol and your question in the comments, and we will go over it live during the show. I know that Meet Kevin today announced that he stopped doing his market open and market close live stream. So if you're looking for a live stream to catch up on what happened during the market after the market has closed, then maybe this could be a place for you. So I welcome you and thank you. All right, let's get into this while you're getting your questions ready. All three major stock indexes, they did gain further ground today as investors seem to have digested another batch of corporate earnings, some good, some bad. And of course, all eyes are on inflation data coming out tomorrow for clues on the timing and the magnitude of the Federal Reserve's tightening. The Dow closed 306 points higher. The S&P 500 gained 1.5%. The Nasdaq jumped 2%, and the Russell 2000 climbed 1.9%. All 11, and it's been a while since I've been able to say this, but all 11 S&P 500 sectors, they closed higher today after registering most, if not all, of their gains right off the bat at the open. Yes, what a day for Disney. It was excellent. Disney totally knocked it out of the park today. I'll touch on their earnings here too. I just have the headline numbers. Obviously, haven't had ability to read over the transcript because don't have it quite yet. But yeah, Disney did awesome. The communication sector, that was up 2.5% today. That led the way. Real estate was right behind it, up 2.4%. In information technology, 2.3%. In materials, 2.1%. Those were the leaders. The consumer staples sector closed fractionally higher, but yes, that was the lagger of the day. But yes, all 11 did finish in the green. And growth stocks today appeared to benefit from a decline in long-term interest rates. Although they outperformed yesterday, even when rates pushed higher. The 10-year yield, it decreased by 3 basis points to 1.93 amid a strong 37 billion 10-year note auction, and of course, hopeful sounding commentary from Federal Reserve officials that inflationary pressures could ease this year, but take it with a grain of salt. We all know that the Fed got it wrong with the whole transitory, right? So just take their comments with a grain of salt. It's just an extra data point that we can use when assessing the market. So here's where we stand year to date. The Dow Jones is in first place, down 1.6% year to date. The S&P 500 down 3.8% year to date. The Russell 2000 is still in third place, down 7.2% year to date. And the Nasdaq, it's in last place, down 7.4% year to date. All right, before we look into Bitcoin and Ethereum and our deep dives for the session, for this live stream session, like we're the market, right? Could you smash that like button, share this video? That really helps out the channel, and it's greatly appreciated. And I do thank you for doing those two things. And of course, if it's your first time watching, then click that subscribe button so you never miss a video. All right. Thank you, my friends, for doing that. That is totally appreciated. All right. Before we check in on Bitcoin, gold was up 0.4%. It's at 1833 an ounce today. Bitcoin is up, but Ethereum is up even higher. BTC, oh, get the cursor on the right screen. BTC USD in Trading View, and there is a link in the description for a free account. Bitcoin is up, it's 1% now. Last time I checked, right after the market closed, Bitcoin was up right about 0.5%. but it is climbing right now pretty substantially, that 0.5%. It is staying above this trend line here, and that is a really good sign. If we look at this thing over the past couple of years, you can see that this bottom trend line that Bitcoin is now back above has been a very important trend line. It was the bottom right here, July 19th of 2021. It was the bottom here just above my head on October 13th of 2020. It has acted as real support. So it was shocking to see it break below that trend line back in early January of this year. But I'm glad it's back above it. That's a good sign for Bitcoin. Now, again, it's up 1.1% right now. So it is moving higher as we speak. But the real big mover between Bitcoin and Ethereum today is Ethereum ETHUSD. And last time I checked, it was up 3.8%. It is over 4% now at 32.46. And it too is back above its bottom support trend line that has seen it act as support for Ethereum. Very similar pattern to Bitcoin, very similar. Right here for Ethereum, it acted as a bottom on the 21st of July in 2021. That was the bottom, and it ended right on that trend line there. And then we can go back. I think my head might be covering it, or it's just above. Let's see here. This would be January the 3rd, 2021. Was another time that it touched this bottom trend line, and that was the bottom for it. So seeing it dip below this trend line here, it was a little nerve-wracking, but I'm glad it is back above it now, and it is carrying on and marching up 4.1%. So both Ethereum and Bitcoin are marching higher right this moment in time. All right, Disney. Wow, what an incredible earnings report. DIS is the ticker symbol for the Walt Disney Company. Beautiful, 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 beautiful. Look at this. Right in this box here. Great to see it climb out of that. What is it? Up 7.99% in the after hours after being up 3.3% during regular session. They completely nailed it. EPS of $1.06, and that beat by 43 cents on revenue of $21.82 billion. And that was up 34.3% year over year, and that beat by $860 million. It was incredible. They had subscriber growth in Disney Plus, and they said that a lot of their subscriber growth, it came from established markets, not just adding new markets for Disney Plus. The parks did incredible in the US here domestically. Disney said that there was with the lack of restrictions due to COVID, the parks were able to bring in a lot of revenue. Now, they did say that their overseas parks, not as good, but still okay, decent. So everything just seemed to line up and work out for Disney really well. I just had a feeling that all of that content they added to Disney Plus had to achieve some sort of positive net add for subscribers, and they did. With all of their properties combined, streaming wise, like Hulu, ESPN Plus, Disney Plus, they are almost at the 200 million subscriber mark. They are just a few million shy of breaking 200 million. So maybe next quarter, if they continue to keep pumping out new and exciting content on their platforms, including Disney Plus, that's the main one, then maybe they could hit that 200 million subscriber mark. That would be incredible, and honestly pretty quick to get there for Disney. It took Netflix much longer than a few years to get to 200 million subscribers. All right, next up after Disney here, I want to talk just a real quick second about Uber. because Lyft came out yesterday with their earnings. It wasn't that great. However, their future looks better. And with a lot of states in the US announcing the end of mandates due to the coronavirus. Dr. Fauci saying that we are in the final inning of the pandemic era. Um, that really helped to boost Uber and Lyft today. Uber, UBER, their earnings came out in the after hours today. Netflix is sweating now after seeing Disney's numbers. I think so. I do. Netflix is mm, ah Netflix. Wow. Okay. Oh boy, just thinking about Netflix and that fall that they had, right? Oh boy. Um, Uber, uh, they beat with their earnings. They're up 5.8% in the after hours, 4.8% during regular session. They've been in this downtrend since reaching a high on February the 10th of 2021. So just over a year, this thing has been in a downtrend. And due to, obviously, the pandemic, right? And people wanting to take their own vehicles and drive them and not take public transit, not get in someone else's vehicle. And that's one of the reasons that Kathy Wood talks about the auto industry and she thinks it's going to lag, especially Ford, because a lot of their inventory, she believes, is in the driveway of the customers. It's not in the, dealer lots. It's not at the manufacturing plants or manufacturing hubs. It's in the driveway of consumers already, and they're not gonna rush out and get another vehicle or trade it in when they just did so last year or the year before. So, this relaxing of mandates is a good sign for Uber and Lyft. I think that is going to be a net positive for both of them. So Uber came in EPS of 44 cents a share, and that beat by 77 cents per share. They had revenue of $5.78 billion, and that was up 82.3% year over year, which is incredible. And that's the type of sign that we're looking for that, hey, things may be getting better for Uber and Lyft, and that beat by $420 million. Yep, 420. Okay, gross bookings for Uber came in at 25.9 billion, and that was up 51%. So again, an incredible rise there. And the year over year of that 51% was at the high end of their guidance. So what they guided for, they came in towards the top of that guidance. That's also really good. Um, Unrestricted cash and cash equivalents, they've got $4.3 billion right now at the end of the fourth quarter in the bank. They can use that how they want. Now, for Q1 2022, what they're estimating for is gross bookings of 25 to 26 billion dollars. Pretty good for Uber and also for Lyft. So, all right, moving on now. I want to do a deep dive on Yum Brands. That's the owner of like Taco Bell, Pizza Hut, right? Yum Brands fast food. There's some interesting details, and the ticker symbol is YUM, Y-U-M. There's some interesting information when reading through the transcript of the earnings call that kind of sheds a little bit of light on other industries, the restaurant industry, fast food industry, of course, inflation, labor. Is it ending anytime soon? Is inflation going to end this year? Is it going to end next year? What's the deal, right? Um, Uber conference call, since we were just talking about them, I just caught it out of the corner of my eye. They gave some upbeat comments when looking ahead into the future. So that's good. Okay, yeah, all right. So Uber, some good things to say on the conference call. All right, good. Okay, back to Yum Brands. So heading into Yum's Q4 21 earnings report, there were some concerns regarding inflation, labor shortages. They were front and center as these challenges continue to ripple through the restaurant industry. When McDonald's missed its Q4 EPS expectations, I believe that was back on January 26th or 27th, investors were put on a bit of a alert that cost pressures could have been more severely impactful, or could have severely impacted, maybe I said those words backwards, for other companies like Yum Brands, Restaurant Brands, Wendy's, those bigger fast food chain companies. Well, I think helping to explain why Yum shares are rallying today is that despite falling short on EPS estimates, as expected, rising commodity, logistics, labor cost, they all significantly impacted Yum during the quarter. Total net cost and expenses climbed by 10% to $1.39 billion, while core operating profit dipped by 1%. Unfortunately, Yum CEO doesn't see much relief on the horizon, and that's bad news. If they're not seeing relief for supply, for labor, for all of these headwinds in the overall macro environment, then even though we're having good earnings right now, Q2 earnings may not be as great. Q3 earnings, maybe not as great. Q4 earnings, maybe not as great. As we all know, there's been a pretty big shift when we're looking at the YouTube or the finance area in YouTube. Meet Kevin is a big figure, of course, in that section of YouTube. With him selling out 99% of all stocks, all crypto, everything, and selling some real estate too, because he believes we're in a macroeconomic top and all we have is down to go, including a recession coming. That's a pretty big statement. And if you pick up these little puzzle pieces, I'll call them, you start putting them together. What Meet Kevin says, right? What the CEO of Yum Brands says, what the CEO of Chipotle says, because they're saying the same things on these earnings call. And you start putting these puzzle pieces together of what all these different earnings transcripts, what you're reading through there, and what other big, finance influencer like Meet Kevin is saying, it's starting to all make sense, and those puzzle pieces are starting to fit together. But then you hear what someone like Kathy Wood says, and that just like, man, where's that missing puzzle piece? I just can't seem to find it. That's like the type of information that Kathy Woods is adding to the overall picture. And it really gives you a conflicting, like, okay, are the next 3, 4 quarters going to be improving or getting worse? So that's why I think listening to these earnings calls, reading the transcripts is important because they're puzzle pieces. So, Yum CEO doesn't see relief on the horizon. And they're projecting that their own operating profit growth in the first half of 22 will will be constrained due to higher general and administrative expenses. So they're telling us right there that the next few quarters aren't going to be great. There's going to be higher costs involved. Some CEOs are saying that they're planning costs several months down the road from right now. So, how can those earnings be getting better? That's the question. Can they? When you have Yum Brand CEO saying that, nope, costs are going to go up for this foreseeable future. Now, this warning doesn't come as a shock to many investors. We're kind of used to the idea that inflation may stick around for a while. I mean, I think that's what the puzzle pieces are pointing to as we're putting them all together. Inflation is going to be here for a while. All of these company CEOs are saying the same thing. Their CFOs are saying the same thing. Inflation is going to be here for a while. So instead of focusing on a well known issue that's expected to eventually ease, right? I mean, inflation, like the stock market, it doesn't go up forever. These positive aspects that we see in Yum's reporting, they're getting the most attention. Led by an 11% jump at Taco Bell, the company's same store sales grew by 5%, which is pretty solid considering that the Omicron variant created headwinds. Likely, though, including staffing shortages that has to play a part. Now, on a positive note, Pizza Hut's turnaround continues to gain some traction with same store sales up 3%. New product offerings like its Detroit style pizza, that increased marketing investments that they're putting into Pizza Hut, and the improved digital capabilities. That's the big one. They all underscore Pizza Hut's rebound. Now, in one sense, the surge in virus cases may have been a benefit for Yum Brands, especially for its KFC brand. Instead of families going out to dinner, some families may have opted for a take home dinner and maybe a take home meal from KFC, which seems to be reflected in its strong same store sales growth of 10%. Now, Yum's substantial digital investments enabled it to withstand the unpredictability of COVID 19. For some context here, over the past 2 years at Yum Brands, the company's digital sales have nearly doubled, and that seems reasonable. It reached $22 billion in fiscal year 21. The company has pressed on the accelerator in terms of its restaurant expansion efforts. In Q4, Yum opened, excuse me, sorry about that. Yum opened 1,700 new restaurants in Q4. That's a lot of new restaurants. Now, it takes their total up to 4,180 restaurants for the year, making fiscal year 21 its strongest growth year in the history of the company. So, that is reflected in the stock price continually rising over the past year for the company. So 2021 or fiscal year 21, their best year in the history of the company. Well, how are they going to keep this thing moving? While operating within a somewhat difficult environment, Yum generated Q4 results that were what I like to call better than feared. Not better than expected, but better than feared. Because we all have this what if question, right? It's either sitting in the bottom of our stomach or the back of our minds. This, oh no, what if? What if labor costs just get too high and wipe out their margins? What if food costs get too high and start to squeeze on their margins? The what ifs can drive you crazy. So, better than feared. Oh man. With the pandemic's grip essentially loosening, with the talk today of a lot of mandates kind of uh, being dropped, short, I don't know. But there was a lot of talk today about a lot of different states just dropping mandates, or at the very least, letting up on the mandates in some way, even in New York City. So that really helped the market today. And that helps because it allows hopes to start rising that maybe labor shortages, the transit issues, and reduced consumer mobility issues will soon subside. One item to keep in mind, though, is that Yum brands will begin lapping much more challenging year-over-year comparisons in Q1, when same-store sales were up 9% a year ago. The tough comps may make for some weak growth rates going forward, especially in Q2, when Yum faces a 23% number from Q2 of last year. And then you add in what the CEO says about these inflationary pressures continuing for the foreseeable future, continuing at least to the horizon. I'm not sure that next quarter is going to be as big as this one. That's my thoughts on Yum brand. I know I threw a lot of things in there uh, unrelated to Yum brands, but I was trying to get a bigger frame picture. Think of it like this. There's this humongous square house, right? And it's lined up with doors all the way around this squared house. And the door has got these old-fashioned, the little skeleton keyholes, skeleton keys that you put in the hole and twist it, this big old key. And if you get down and look, you can look through that keyhole and you can see something. Well, if what's inside that big square room is the exact same thing, but each one of us is looking through our own keyhole. I may be looking through the keyhole on the right side of the building. You may be looking through a keyhole in the front of the building. Heck, who even knows where the front or side is, because the whole thing is just a square and it's filled with doors all the way around it. We're looking at the same thing, though, but from different angles, right? So we may see the same thing as each other, but it's going to be a little bit different. So we've got to take all these pieces of puzzles, all of these earnings reports that are coming out right now, and put them together like a puzzle to try to figure out what's in the room, what's ahead for us in the future, what's going to happen next quarter after that, what's going to happen at the end of the year, what about the beginning of next year. That's what's inside the room that we're putting all these puzzle pieces together to figure out. We're starting to get a clearer picture. We don't know for sure, right? But we're starting to get a clearer picture. Sorry, I totally missed that comment. I believe we have a melt up for the next 2 months and then suffer a major crash in 3rd and 4th quarter. That is a good assessment. That is. If we're looking at the S&P 500 just as an example here, and then I'll talk about my deep dive on Chipotle. Kind of have a food thing going on this today's live stream. If we look here at the S&P 500, uh, we had this really nice rally. Some people were talking melt up top once we broke this high of 45.42 here back in October, thinking, oh, this will be the melt up. But we really just moved sideways. Yeah, we got to a new high on November the 5th, but it wasn't that much higher. 46.89 versus the high of about 45.42 on the S&P 500. So that's not really a melt up. And then we got to this high here on January the 4th. That's really not a melt up either. We kind of moved sideways, moved up, moved sideways. What I'm thinking may happen, we had this big pullback here, right? Let me just get this here. We had this pullback here in January, and we came down. We were 22 points away from hitting 4,200. And we got a nice little bounce from that. And then we kind of moved sideways. I think it's possible. Well, there are two scenarios, obviously. We either go up or we go down. With the CSI data, CSI, what am I thinking about? CPI data coming out tomorrow. Will we get a big reading, hot inflation in the market, then go down? That's option A. Or the market just doesn't care. Maybe we get a red day tomorrow, and then by Friday, we get some other earnings that are positive for the right now, for the here and now, not next quarter. And then maybe we get the market to kind of go up. And maybe the market goes up for the month of February. We get a nice new all-time high. Maybe we break 5,000 on the S&P 500. And then, boom. Then, boom. So we have two scenarios, two probabilities of how the market is going to react over the next month. It is possible that February is our melt up. We just melt up to the top. Maybe we break that 5,000. And then we get the very first rate hike, and maybe that rattles the market. And that's when it starts. That's a possibility. Or we're pricing in the rate hikes right now. And that's why we had the pullback. That's why we had the kind of dusting off of the valuations of the big tech names. I don't know if we would call Meta Platforms a dusting up, but hey, let's roll with it. Maybe this melt up takes until the summer, or till May, or till October. The timing, I don't know. But I do think this melt up is becoming a possibility. If we get through CPI data tomorrow unfazed, where it doesn't send the market back down, then I think the probability increases some that we do see a melt up to a new top, new high. I don't know the timing. but I know that the valuations right now are, I don't know. I guess the right way to phrase this, the market right now is just unpredictable at this level. When we're at the bottom of the market, we know that, okay, we're at the bottom. We got to be starting to head back up at some point, right? When you're at the top, you've got that same feeling. All right, we are at the top of this market. I know it's going to come down, but when? And then we all just kind of freeze or do things that are irrational. I guess that's why we need a plan. We should always have a plan whenever we're investing. Don't just buy a stock to chase it because it's gaining one day. I mean, today's a perfect example of why you don't chase stocks, because a lot of stocks today, the gains were this morning and the rest of the day was flat. So if you didn't already hold on to whatever company this was or that was, then you missed out on the gain, because most of them again happened this morning. Okay, let's move on to Chipotle. I want to talk about them for a minute. So ticker symbol for Chipotle is CMG. Chipotle Mexican Grill. Kind of got, man, I really got taste for some tacos after talking about Yum Brands with owner of Taco Bell, now Chipotle, maybe a burrito bowl. Sounding good. How about you? Is that tempting? All right, 10.1% today during regular session and flat during after hours. They really need to do a stock split. 1609.92 is where they're at in the after hours. Wow. Wow. They're still about $50 shy of their 52-week high. So they have pulled back some, but not a whole lot, quite frankly. Okay, Chipotle. They and this is again, let me just back up for just a quick second. If we look at Chipotle in this gap up right here, if you weren't already in this thing, you missed this gap up right here, right? So that's where it all happened in the morning and then kind of just sideways the rest of the day, which makes sense for a day the day before CPI data, because a lot of times the day before, 2 days before, the market is just flat. But we did get some nice gains this morning. Okay, let's get off of that. Chipotle, it's definitely higher, and this is after they reported a robust Q4 result. Now, like Yum Brand, Chipotle moved higher, and it had a lot to do with their digital efforts. Digital efforts. That is becoming key for fast food chains. It's no longer about how quick are the drive-through speeds. How quick can you get into a driveway, make your order, pick up your food, and get out of line? It's no longer about how quick the drive-through turns. It's about how your digital storefront can operate. So Chipotle reported another big EPS beat. Although it was a bit smaller than its beats posted in Q1, 2, and 3. Its revenue was also in line, which is also consistent with prior quarters. That's usually how it happens. Now, I have to admit, though, I was a little bit nervous about the company's Q4 comps and its Q1 comps guidance, given the impact of that Omicron variant that added a bit of unpredictability that I was just a little unsure about. And over the weeks following Thanksgiving, that's when I guess the concern kind of was building. But Chipotle conceded that moderation of its comps began back in the second half of December, and then it's intensified into January. And that presented a, well, I guess I should say that didn't present. There was a challenging weather across the country that January, and this is what added to that trouble in January that they had to deal with. Now, despite those headwinds, the company's Q4 comps growth was at 15.2%, and that was towards the high side of their guidance, which is a good thing. Chipotle does expect quarter-over-quarter softness, with Q1 comps expected to grow between 5 and 9%. Okay. If we think back to what I was talking about with Yum Brands, they do not see Yum Brands, not Chipotle, but Yum Brands does not see any relief on the horizon when it comes to supply chain, labor, any of those headwinds. We can sum it up with one word and just say inflation. Chipotle is saying the same thing. Now, the good news about January's comps, they were around 5%, which is not bad, all things considered. Now, as COVID cases decline, Chipotle expects comps to accelerate from the January level to the February-March level. Digital sales, they grew 3.8%, and they accounted for 41.6% of total sales. That's a big deal. Almost half were digital sales, 41.6%. Now, a bit of the dip from Q3's 8.6% growth, though, accounting for 42.8%. Now, I'm not concerned about that little dip in digital sales, as Chipotle was lapping a tough comparison from Q4 2020 when digital sales soared by 177% year over year, and it accounted for, back in 2020, 49% of sales. So it's come down a little, but that's okay. I'm not worried about that. Earlier in 2021, I wondered if digital sales would drop off as restaurants reopened for in-store dining. But with several quarters of data now, that data has shown us that digital sales have been very sticky. And this looks like it could be a new normal. Because remember, going into the pandemic and then halfway through it or so, summer of last year, even the summer of 2020, what's the new normal going to look like? Well, I think this is one of those new normals. Digital sales are going to account for at least 40% when you're looking at Chipotle of their sales. And even if the mandates, restrictions are all lifted, I think we're still going to see digital sales remain high. Now, on a slightly negative note, Q4 restaurant level operating margin came in at 20.2%. and that was at the low end of their prior guidance. And that prior guidance was 20 to 21%. I didn't put a star beside it, so I had to look for it there. Okay, so it was a little on the low end. Not too bad, though. Still within guidance. Now, besides ongoing labor pressures, the Q4 margin was also hurt by higher beef and freight costs. As a result, Chipotle implemented a 4% price hike on their menu, and that increased in mid December. Now, because it was made so late in the quarter, it didn't really have that much of an impact on Q4's margins. However, though, Chipotle expects a full quarter of higher prices to drive Q1 margins to nearly 22%. Now, that projection would have been in the low to mid 23, 24% range if not for the elevated marketing spend that it experienced, or it expects, I guess I should say, in Q1. Now, my take here is that margins remain generally healthy despite, of course, inflationary pressures. And Chipotle's ability to increase prices without much pushback from their customers showcases its pricing power. Just like Tyson's Food that I mentioned a couple days ago, yesterday, maybe a day before. Pricing power right now with companies is very important because the more you can either absorb the price, the inflationary pressure, without affecting your margins, or the easier it is for a company to take those inflationary pressures and act like a shield and bounce it off of them right to their customers. Those are the two ways that companies have the pricing power, and Chipotle is one of those. It's got the shield version where it bounces that inflationary price onto the customer. Bad for us when we're buying those bowls, those burrito bowls, but good for the company and shareholders. All right. The company's 2021 menu developments included the launch of cauliflower rice in January. It's actually not too bad, if you ask me. The quesadillas in March and smoked brisket in September. All new items performed very well. Now, in 2022, Chipotle has already launched plant-based chorizo, having a tough time pronouncing this one, under a limited promotion. And it's off to what Chipotle says is a, quote, terrific start. Now, Chipotle has been testing other innovations for their menu, also with chicken. And they've always done this. And they're how long has Chipotle been around? 28-year history. And then they pick what works on that innovation and they put it out for the public. The cauliflower one is a cool one. I actually like it. Okay, one of my criticisms, though, for Chipotle over a few years ago was its static menu. But Chipotle's new CEO, who actually came from Taco Bell, has made the menu more exciting. So that's something that Chipotle needs to be careful of. They need to make sure that their menu is staying crisp, on point, and keep testing new, exciting items. Don't get static and stale. Now, overall, this was another great quarter for Chipotle. I think that investors are most pleased that the Q1 comp guidance stayed largely healthy despite Omicron. I was definitely nervous about what that Q1 comp guidance may be. I mentioned at the very beginning, especially given that the comp would lap Q1 21's huge 17.2% comparison. Another standout metric is restaurant level operating margin, which is set to bounce in Q1 a little bit higher, which is good for Chipotle. Chipotle seems to be navigating two big headwinds: Omicron, which seems to be fading a bit, and inflation, which seems to be persisting a bit, right? They seem to be managing that pretty well. I also like that Chipotle upped its long term goal of 7,000 plus restaurants in North America. Now, that goal was at 6,000. So they're going to add another 1,000 plus stores. That's their long term goal here in North America, which is really cool. That will definitely help growth for the company. The company also has a lot of growth ahead, and it's got a lot of pricing power. And I think when we look back at this recent pullback here for Chipotle, with this growth, adding another 1,000 plus stores, imagine the growth that 1,000 plus stores will add to Chipotle. I think looking back, we might just say this was a good buying opportunity. Much like I believe with Tesla. 5 years from now, we may look back and say, you know what? Markets fall, markets rise. There's a cycle. There's no doubt about it. But as long as we are in the market, as long as we, at least on a surface level, make smart choices and we use data, we don't overwhelm ourselves with data. We don't overwhelm ourselves with, oh my goodness, when should I buy this? Should I buy this? Oh my goodness, I just missed out. Should I jump in now? I think over the long run, it doesn't really matter. As long as we're dollar cost averaging into things that we love. I said this a couple live streams ago as a very simple investing strategy. Buy the things that you own and love. You have an iPhone and you love it, then buy some Apple stock. You wear Nikes, you love the kicks, then buy some Nike stock. You've got a Pixelbook, a Chromebook, an Android phone, something of that nature, buy Alphabet stock. You love Chipotle, you go there once a week, you think it's great, buy some Chipotle stock. Buy the things that you own and love, whether it's a product or service, and then dollar cost average into it. Buy a little bit this month, a little bit next month. And you do that for 5, 10, 15, 20, 50 years, and you won. You won. All right. I'll wrap the live stream up here. Unless you have any questions, feel free to plug them into the chat, and I'll get to them. And while we get to this point, I do want to talk about a couple catalysts for tomorrow that I'm watching. Of course, tomorrow being Thursday, February the 10th. And the big thing is the consumer price report, the CPI data. It's got the potential to rattle markets. Now, economists are expecting a 7.3% year over year rise and a 0.5% month over month rise, higher in inflation, which is seen as being just enough to keep the Fed on track to raise rates at the next 3 FOMC meetings. We'll have to see about that fourth one. Now, a surprise to the upside could stoke speculation of a 50 basis point hike at the March meeting. So we'll see on that one. Now, one of the biggest events of the week will be Uber Technologies and their Investor Day. Kicks off tomorrow, of course, right after earnings. Now, this will be their first Investor Day since their IPO. So hopefully they're going to share some interesting things. I think investors will probably focus on long-term financial targets presented and, of course, commentary on short-term pricing and wait time trends. Also, look for some updates on the regulatory backdrop as the upside seen with a $1 trillion grocery market opportunity. Yeah, $1 trillion for delivering groceries. That's pretty big. Also, the IPO lockup expiration does expire for Dutch Bros tomorrow, so that could apply a little selling pressure. Although, with prices down for Dutch Bros, I'm not sure that anyone might want to sell. Maybe there's some that need to, but anyways, that's happening tomorrow. Also, Blue Apron, ticker symbol is APRN. Blue Apron. It's one of those monthly, or I shouldn't say monthly, weekly uh, boxed food delivering type companies. But they were up 7.7% today. Yeah. But anyways, Blue Apron tomorrow, they're expected to see a 21% move after earnings come out based on options trading. Now, the options market, it can predict how things are going to move, but they can't really predict the direction per se. I mean, I guess you can look at the put call ratio to see where they're leaning, but we don't know what the numbers are because that would be insider information if we did. So we don't. But anyways, the option market is betting on a big move either way after the numbers come out for Blue Apron. And Blue Apron has seen, again, a 7.7% move today. They've also seen a 5% move after the last earnings report. We also get earnings from AstraZeneca, Coca-Cola, Philip Morris also reports tomorrow, Kellogg's. Zillow reports tomorrow. So we got ticker symbol Z and ticker symbol ZG. Zillow, it'll be interesting to see what they have to say because remember, Zillow had this humongous fallout last quarter. And then, of course, leading up to last quarter, the thing had been dropping for several quarters in a row. But that huge, huge drop last quarter over, let's see, what does this add up to? We got, let's see, two, that would be for over 42% drop in 3 days. 42% drop in 3 days because they stopped doing their Zillow offers program, what Open Door does, right? So it'll be interesting to hear any commentary from Zillow tomorrow on their earnings report about what's going on with them and where are they headed, what are their goals for the future. So that'll be an interesting one. I don't know if it's going to move the stock one way or another. It was up 2% during regular session, 5.7% in after hours today. So who knows what's going to happen, but it'll be interesting to hear about their future plans. All right, ladies and gentlemen, I will wrap it up here. I thank you so very much for joining me and being here this evening and today. And remember, we're here every day, 5:30 after the markets close. Every day the market's open. to talk about stocks, crypto. Really, what's on your mind? That's the most important thing. All right, so if you are watching the replay, leave the ticker symbol and your question in the comments, and we will go over it live during tomorrow's show. And I'll see you in the next video.